All right, hello everybody. Thank you for tuning in. We're going to take a little look at what SPY did today, which was not much, but there's always a lesson to be learned. I can say every day there's a lesson to be learned about the market. So today we are going to have a quick discussion, maybe just 5 or 10 minutes or so, about how to find trading ideas. Now here's SPY, right? What did it do today? Pretty much nothing. This thing has been range bound for the last week. It's pretty boring. I mean, I could be up here reading you, Othello or Hamlet, and it'd probably be more exciting than this. But sometimes there's stuff going on that isn't readily apparent, and we need to kind of dig beneath the topsoil or go behind the curtain or whatever your analogy is. So the S&P 500 flat for the last few days. Now let's remember, the S&P 500 is made up of 11 sectors. And sometimes when we look into those sectors, we can get an idea of what's going on in the market at a deeper level. And sometimes we can find really good trading ideas even when things don't seem like they're moving that much. Now, I just want to point out this phenomena to you here, how support can become resistance. See support, resistance, resistance becomes support. So support becomes resistance because of buyer's remorse. There's people who bought here, decide they made a mistake when the price goes lower. They tell themselves they want out, and they sell if the price gets back to their level. So if you have enough remorseful buyers placing sell orders at the level that was support, it becomes resistance. Now, here we have resistance becomes support. How does this happen? Well, seller's remorse. People sell, the price goes higher. They tell themselves, I made a mistake. If it gets back to my price, I'm going to buy it back. If you have enough remorseful sellers placing buy orders at the level of resistance, it can become support. Now, come on, man. I'll bet you that you might have done this on more than one occasion. But the good thing is you're trying to learn, so it'll help you with your trading. Now, remember, the S&P 500 is composed of 11 sectors. One of these sectors is healthcare. Now, this is the second biggest sector. The the SPY might look like it's not doing much, but the healthcare sector looks like it's doing a lot. It's formed what we call a descending triangle. Now, a lot of technical analysis really sucks because people that teach it don't know what they're talking about, so forth and so on. But if you look at this through the context of supply and demand and investor psychology, what does this tell us? What does this pattern tell us? It tells us this. We have sellers are getting more aggressive while the buyers are complacent. The buyers are kind of cool. They're just hanging out around 130, 150. And they're like, all right, well, if the sellers come to us, we'll buy. If not, like whatever, we don't really care. I'm going to go to the beach. I'm not that concerned. But at the same time, notice how we have these succession of what we call lower highs. Markets go in peaks and valleys. And when the peak is lower than the prior peak, we call that a lower high. And this is what the descending triangle shows us. Sellers becoming more aggressive, buyers being chill and complacent. When you have aggressive sellers and complacent buyers, it doesn't matter what market it is. It could be the market for stocks, commodities, apples, fig Newtons, you name it. Aggressive sellers, I hate fig Newtons by the way, but aggressive sellers and complacent buyers sets the stage for a move lower. So now that we see a sector, remember there's 11 sectors in the S&P 500. Now that we see a sector that looks weak, what we can do is look within the sector for stocks that could give us trading ideas on the short side. And I don't necessarily mean short, but to potentially, if you're an options trader, which most of my students are, to buy some puts. So we have the sector looks weak. This is the aggregate of all the stocks that are within this sector. All right. I don't know how many dozens or 50, 60 stocks are within the healthcare sector. But when we see a sector that looks like it looks weak, we can look at the stocks within the sector for things that look even more weak. And that's where our trading idea comes from. And this is, I think, a pretty cool trading strategy or strategy for coming up with ideas, which has worked very well for me over the last, I don't know, 20 some odd years. These are the stocks that are within the sector. At least these are the top 10. United Health Group is the biggest one, 9.2%. Johnson & Johnson, Eli Lilly. So I went through these stocks and I found what I think is probably the weakest looking chart. I'm not guaranteeing it. I would invite you to listen to some of our technical analysis lessons about levels and momentum, and maybe you could see something that I don't. But these are the top 10 stocks within the sector. And like I said, I'm not sure. There might be 30, 40 stocks within the sector. Now, what did I find? Thermo Fisher Scientific, symbol TMO. Look at this. Here's that phenomena, again, I just mentioned. Resistance can become support because of seller's remorse. We see TMO is testing a support level. What is support? Support is a large group of investors who are looking to buy shares at or close to the same price. In this case, this is around 532, 533. Now, when we get below a support level, we say the support is broken. This is not merely symbolic. When something trades below a support level, it is an illustration that the investors who created the support with their buy orders have left the market. They've either finished their orders, maybe they canceled their orders, but the buyers are potentially out of the way. When you take demand off of market, it sets the stage for the price to go lower because people who want to sell have less demand to sell into. So they're probably going to have to accept lower prices. So when we break support, it tells us something. Remember, most technical analysts don't know what the hell they're doing. They look at these patterns, but they don't really understand what's going on. And I think that's because they don't have the same amount of experience trading that I do. Maybe they've traded their own account, but they've never traded in the institutional world. So the support is potentially broken, means the buyers are potentially out of the way. And notice how we had a fast move higher. Well, there's a chance we get a fast move lower. One of the things I mentioned was how a resistance level can become support because of our seller's remorse. People sell, the price goes higher, they think they made a mistake, they want to buy their shares back, but only if they can get them at the same price they sold them at. Now, when we have a really rapid move higher, like we did in November, and we just blast through these levels and we gap through these levels, the price moves so fast and the stock moves so fast that there's just not a lot of time for there to be a high concentration of sellers trying to sell at or around the same price. So when we get back to those levels coming the other way, there's a good chance that there's not going to be remorseful sellers trying to buy their shares back, and that's going to diminish what would typically be the support. So support, a lot of buyers. If we don't have those remorseful sellers trying to buy their shares back, there's a good chance we make a rapid move lower. Sellers are going to come into this market and they're going to have a hard time finding buyers, and they're going to have to force their shares out at a discount, and that's going to cause a downturn. Potentially, it's not a guarantee. I'm just trying to teach you how to look at the markets, and what I think is a very effective trading strategy is actually frequently used in the institutional trading world, and I know what I'm talking about because I was there for longer than I care to remember, 2.5 decades. Now, what could be a potential target? Well, you buy your puts, you watch the stock gets down to around here, around 490, 485. It's a good chance for support because there was support back here. Levels that were support tend to repeat themselves. There could be people who are patient, who wanted to buy back here, who are just waiting for the price to come back. There could be people that shorted, that are underwater when the price goes higher, and they tell themselves, if I can get out at break even, I'm going to, so they're going to buy their shares back here. So, real simple idea. We look at the sector. If the sector looks weak, we look within the sector for a stock that looks the weakest. There's where we can come up with a technical trading idea. We had a fast move higher, which means there wasn't a lot of time for there to be a large concentration of sellers who are going to be remorseful, trying to buy their shares back on the way down. So this sets the stage for a potential move lower. Everybody, thank you so much for tuning in. Make sure you check back because I like to look at SPY and the sectors every day, and I hope to see you soon. Thanks, everybody. Have a good night.